People and companies affected by COVID-19 will get more support in managing debt and cash flow. Together with the finance industry, the Monetary Authority of Singapore has announced some measures to help people meet their financial obligations in this difficult time. Chloe Chu explains.
The Singapore economy contracted greater than expected in the first quarter of this year, faced with a sudden fall in external demand and disruption in supply chains worldwide. And in view of the weak economic outlook ahead, this new package complements the two budget packages unveiled by the government to preserve jobs and support enterprises and households. It focuses on three components: helping individuals meet their loan and insurance commitments, supporting firms with continued access to bank credit and insurance coverage, and ensuring that the interbank funding market remain liquid and well-functioning. For individuals, they may defer repayment of their residential property loans until the end of the year. This is eligible for individuals who suffered a loss of 25% or more of their monthly income from February. Borrowers can also choose to convert outstanding unsecured debt from credit cards to a lower interest term loan. This has an interest rate capped at 8%. For SMEs, they can also look forward to deferring the payments of their business loans until the end of the year. Banks and finance companies may also apply for funding with the central bank for new loans supported under government schemes. Both individuals and SMEs holding general insurance policies can request for payments in installments while maintaining the insurance protection. The MAS explains that relief for individuals and SMEs will be provided on an opt-in basis, as their cash flow circumstances will differ. It also warns that deferring payments increases future obligations, and that borrowers should weigh their options carefully.
For more insights, we're joined by Sumit Agarwal. He's Professor of Finance, Economics and Real Estate at the NUS Business School. Good evening, Sumit. Part of these measures are that mortgage loans payments and interest deferment. We're going to see some of that. But how much of a difference is it going to make to individuals? And how does it compare to what's being done elsewhere in the world?
First, I should say, look, the MAS and the finance industry has come together very quickly to provide this package and relief to the consumer and SMEs. Now, it depends if you're in HDB versus in a private condo. It could be anywhere from $2,000 to $5,000 per month reduction in your mortgage payment, mortgage plus interest payment for the individual. Now, I was involved in the financial crisis in the US in 2007 and 8. And I remember we came up with the HAMP and HARP package at that time, and it took us months, if not years, to negotiate the size of the package, the dimensions of the package, and it was not even close to what MAS has done. So I really commend MAS and the financial intermediation industry to do this quickly and to come up with a massive package to really help to the private sector and SMEs to kind of understand what the implications would be of this crisis.
And Sumit, what effect do you foresee that this will have on the property market?
So the property market, I would say, if there was no such package, what could possibly happen is people will default on their mortgages. And if there are higher defaults, that will result in foreclosures, and that would depress property prices. Now, this kind of package would actually reduce defaults, and as a result, home prices should not go down, should be stable. And I think that's a good thing, maintaining property prices at this time.
Sumit, small and medium-sized enterprises have been particularly hit because of this COVID-19 outbreak and the impact on their businesses. SMEs now are going to be allowed to opt to defer principal payments on secured term loans, but they have to continue to pay interest on those loans. So how much will this help to cushion the impact that these companies have seen or are going to see as a result of this ongoing COVID-19 situation?
Yeah, so SMEs, it's a broad category. Anywhere you could have somebody borrowing from anywhere $200,000 to $500,000 to $1 million. So again, you could see a reduction in principal payment of maybe $2,000 to around $5,000. That's quite a lot. Now, obviously, you don't want to provide misincentives to SMEs by saying, look, you don't have to pay anything, because then they might say, okay, I could just defer the payments and I could close shop and actually even fire my employees. This actually provides them incentives to keep businesses open, because they still have to make some payment and keep their employees. And this is essentially, in a way, providing a package to kind of say, look, we understand you, this will be tough times. Don't make the payments. Use that money, use that liquidity for other purposes that you will have, either for procuring your products that you need to provide services, and so on and so forth.
Just quickly, Sumit, I just play devil's advocate. With all these measures in place to help individuals and SMEs, what can banks do to prevent abuse?
Yeah, so I think they have done quite a lot to not create incentives for abuse. I mean, on the one side, they're saying, look, there are restrictions on how you will be eligible to get into that. On the other side, they also don't want to make it so restrictive that nobody can qualify, like what happened in the US with hemp and harp, that the restrictions were so hard because they were worried about abuse that the program did not actually work because nobody could qualify and nobody could take advantage of it. And as a result, it was a failure. So here they have been very liberal about it, but they have also put in safeguards. So obviously the banks will monitor it from their end so that the abuse is minimized. But I don't worry about abuse at this point, especially in a country like Singapore. But I worry about creating confidence, and we need more confidence among the consumers, among the business community and the investment community that the government is doing all it can. And right now, I feel the government, both from the fiscal side and monetary side, has done way beyond what it should. Now the question is, can the consumers and the individuals step up and also do something? Because we already see the private sector, which is the financial industry, is also stepping up. Now the individuals should also step up and take responsibility.
All right, Sumit, thank you very much for your time this evening. Pleasure speaking to you. Sumit Agarwal, there, Professor of Finance, Economics and Real Estate at the NUS Business School.